From a correction in Germany's DAX, which tracks blue chip stocks, to worries over Greece and Britain exiting the Eurozone, where are the opportunities in Europe? Alastair McCaig is a market analyst with IG Markets and joins me now from London to discuss more. And Alastair, what do you make of the correction we're seeing in the DAX, which is down over 10% since its April high? Is it time to get in?
Well, I got to say that when you consider that the quantitative easing policy is still well in place, and quite frankly highly unlikely to actually end in September 2016, which is what's penciled in for the time being, that there's always going to be some supportive buying creeping in the not too distant future, and a 10% correction in the markets I'm sure will entice quite a few buyers in from the sidelines, maybe not quite as enthusiastically as might happen at other times of the year, now that we're sort of moving into the summer months, but nonetheless, institutional investors will undoubtedly be eyeing this up as an opportunity.
All right, and companies within the index that offer unique opportunities, what do you say?
Yeah, there are certainly a number of companies that maybe stand out as a little bit more attractive. I guess with today's news flow, Deutsche Telekom would be the obvious candidate for that. It's in the process of trying to strip off T-Mobile to get an affiliation with Dish Networks over in the US, which would reduce their exposure to the US markets. And there's a lot of speculation that they're eyeing up some sort of acquisition of BT. I think the whole telecommunications sector, quite frankly, is ripe for further M&A activity as the whole amalgamation between satellite, broadband, mobile and content continues to look very attractive, and the lines between companies that straddle those different sectors becomes increasingly blurred.
All right, and staying in Europe, obviously Greece is continuing to struggle with its debt woes, causing investors to wonder if they'll exit the Eurozone, but there's also talk of Britain withdrawing from the EU. Now, you say the Eurozone is directionless. What does that mean for investors?
Well, in the short term, I think we're all sort of treading water, waiting to see an end result as far as Greece is concerned. My take on it is that Syriza are probably trying to force the situation whereby they can get a referendum organised in Greece. Certainly the latest consensus infers that the Greek populace want to remain part of the Eurozone. And if they could get a referendum in place and get that pushed through, they would then maybe be in a situation where they could have a fresh mandate, as it were, to maintain their status in the Eurozone and, quite frankly, break the promises that they made in the electoral run-up.
All right, and switching gears now to corporate news, HSBC announced plans to cut 50,000 jobs and a massive cost-cutting effort. Now, there's also talk that they may relocate their headquarters out of London. What does that mean for stockholders and anyone looking to get in on the stock?
Well, I think when it comes to job cuts, the markets always take that as a pretty positive sign. It's an operation in cutting costs, and from that point of view, it'll be something investors will be happy about, not so much staff, undoubtedly. But this is a template that's been in place for some considerable time. We've seen about 87,000 jobs being cut at the firm since 2011, when Stuart Gulliver came to being CEO. We've seen the number of countries that HSBC are exposed to drop from 88 down to 73 over the last 5 years. Yeah. When you consider that the improved profit margins that are available to the Asian market, specifically in China, the attractiveness of refocusing their business out there is obvious.
Thanks very much for joining us, Alastair McCaig from IG Markets. I'm Scott Gamm, and you're watching The Street.